All right, traders, good afternoon. This is Christian from Hertz Market Trade Group, and today is Tuesday, December 6th. Let me just turn on the camera because I forgot to do that. Let's see if it works. There we go. Hey, all right. So, another interesting day, of course, heavy volatility. Where did the VIX finish for the day? The VIX finished up another almost 7%. We're up to 22 in the VIX. So volatility has come back in pretty decently, combined after yesterday's move up in the VIX too. Let's kind of just talk about a couple general things. First, of course, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Another negative breath day today. That was where we kind of started for the day. Interesting, not nearly as bad as yesterday. Yesterday was really a bad breath day. Today, it never really got as extreme. It was just kind of a methodical move down. We'll talk about a couple of things I didn't talk about yesterday, but the dollar moving up a little bit. I mean, especially from the lows of the day to the highs. But this doesn't, indicate like a big jump in terms of like risk off. It just kind of feels like there are some funds out there that are either reducing their risk just kind of taking down some positions. It doesn't feel like there's a major like risk events, but I could be wrong. It just seems like, hey, some funds are kind of just, out there selling. It does feel like in the indices as well, because they just couldn't turn the corner all day long. Another thing that I noticed this morning, this morning we were kind of really choppy going into the open, which after a big day down like we had yesterday, you want to see a pretty decent rebound or like a possible turnaround Tuesday. And it just didn't look like that was materializing today, because pre-market even, it looked like the averages were like every time like the NASDAQ would go up a little bit, it would just get hit. So it just looked like today there was like day two of selling. Really, I think what's going to kind of come into play here as I bring up the S&P chart is, will this entice buyers to come in? I don't have the answers to that question, and sometimes you just need a little bit more time. A lot of things really, when you look at individual names, what I noticed, which was also yesterday, like individual names did not look good yesterday. And more of that, a lot of names maybe that got a little bit overcrowded, maybe people got a little bit complacent into, those seem like they got hit the hardest. I'll review a couple of those names in just a second. So, sometimes it is just a little bit of how the life cycle of how a little bit of a pullback happens. This seems to kind of rhyme a little bit when one of the names that I'm referring to is AEHR, which is a name that everybody's kind of got a little bit complacent in. It's a semiconductor that's acted really well. It had good earnings. But what happens sometimes is, when we do have a day like this, those areas get hit the most. So what I'm kind of getting at is we might have, this might just be a little bit of a reset. And I don't have the answer to that if it is, just kind of shaking people out of some overcrowded trades. I think time will tell. And I think, ultimately, what we talk a lot about Tribeca Trade Group is, manage your risk, right? If things are starting to kind of go to the downside, like they were the last 2 days, unfortunately, I reduce risk, and unfortunately, sometimes it's at the wrong time, right? But I try to be patient to say, okay, well, what kind of day do we have on our hands, right? The breath wasn't really that bad. It could be that buyers step back in. So I try to give some trades patience. But then, every once in a while, and I think this happens to everybody, but sometimes you could sell at the low of the day and the name could come back and the market could come back, right? But we don't know. We could see some more damage. I like to basically as well talk about what I'm going to do. I run, in my head, and I talk about it. I think I talked about it in yesterday's video, a scenario analysis. And I basically said, hey, the 20-day moving average is where I'm going to be reducing risk in some things, right? Notice what we did today. We broke through the 20-day moving average. And what do? I kind of reduce risk. Also, if you note, We broke through the lows from last week, right? So we could bounce here, but I don't like this particular setup. You know, I'd like us to kind of hold on to the bottom of value and then look for a rebound. I don't like a breakthrough because now you could possibly have like a retest and a fail back down. So this is kind of tricky, right? And here's SPY too. The valuers are a little bit different. SPY is kind of holding on to that. Oh, let's wait for SPY to adjust. Yeah, it is kind of holding on to. It's weird. SPY shows that we held on to last week's lows. I don't know, maybe because I'm adjusting for contract changes or something like that in futures. So I'll use SPY for now. But the level to watch is 390, 371 for SPY. And Qs, which we're trying to basically show a little bit of outperformance, at least that's how they acted yesterday, and a little bit pre-market, but not so much, down 2%, the Qs were today. Notice again, like where this is at, right? It's basically back into this range. We know that the VPOC, both on the 1 hour time frame as well as on the daily time frame, is where we got rejected. And we're kind of just sitting back on this lower range. So buyers could come in and defend this level, and we'll just kind of see. Also, there was a virgin point of control taken out today too. Didn't provide any major substantial support. You know, so we'll have to just see, right? And I think when you look at a lot of charts, that's kind of the conclusion, and we'll see without a lot of exposure is basically how I you know, how I'm looking here. Also, there was so there were some downside things that were taken out. There was a downside VPOC taken out here, right? We talked about a lot in yesterday's video about the weakness in the small caps, how I said I did not like that. They did get down to the bottom of value and basically hold. However, from a strength standpoint, you're now dealing with something that is moving further away from the 200-day moving average, and I don't like that either, right? IWM as well broke through the value area, so we've got some damage today being done, like in the short-term technicals. All right. So again, I'll kind of show you what I did today. You know, unfortunately, I got out of some risk, some good trades, some bad. What do we want to talk about first? Let's talk about the bad. So ENPH, right? This was a trade that I added yesterday. It did hold where it needed to. Unfortunately, I just didn't want to sit through the pain down to 305, and now it has kind of lost this whole move. Remember, everybody got excited about this breakout. I was out most of the day, but you know, I capitalized on the weakness yesterday, which was a nice little inside day. Today is too much. Right, today you're reversing and you're going actually below. You know, this looks like an evening star. So I took off this trade. Unfortunately, I didn't do it in the beginning of the day. I really thought that 320 might hold. All right, and then we kind of checked into here, and I'm like, well, and I actually added to my position in here. Thank goodness, by the way, that I took 2 targets in ENPH yesterday, because I know this is a volatile name, right? I took 337. My cost basis was 328, right? Unfortunately, like I said, I added to this thing right at 316, which I think was right in, was like basically right in here. I was looking for this thing to recover. It didn't, and I took the majority of the position off. Excuse me, I took the position off there. So that was my worst trade of the day, and kind of cost me the most P&L. On the flip side, we saw, you know, one of my favorite names, SMCI, really nice looking call buyer today. I threw this in the charts channel, I believe. Here's a couple setups that I was, but this was nice. It was like 2 trades of roughly like $500,000. So $1 million on the February 95 calls. That's a good chunk of change. We don't normally see too much option activity in that name. So again, that's a name that you've heard me talk about before. I was actually long coming into today and was very close to getting stopped out. It was a question mark whether or not I was going to add to it, because I thought that this, you know, just like we've kind of mapped out some levels in ENPH, I thought it was possible that this virgin point of control down here at 78, 79 could get taken out. and it could get, it didn't get taken out today, but it could down the road. What I would like to see is this thing get back above 87.30, right? Then we don't have to worry about that lower level. But it did hold for now the 20-day moving average, which is exactly what I wanted to see. Nevertheless, just because of risk management and with this market, I did take a profit target. I took off my ad today at $85, paid $81.60. So that worked pretty well. A couple other things, and this is just trading, right? Something hits a stop, you take it off. Shop, I really wanted to see this thing kind of base, and it may still do that. But hey, my thought was this thing got above the 200-day moving average. Here, is where sometimes whipsaw comes into place, because if this thing gets back above the 200-day moving average, I'll probably try it again, right? But again, this is risk management. It goes below the stop, you get out of it, right? And it did fall back below here, and I'll try it again. Right. I had a question from a member this morning about a particular name that is rising up. I'll actually bring up the chart. They had a question on Workday, which is a very good question. Right. They said, hey, what do you think of Workday? It had good earnings. I have a pretty detailed earnings strength and gap list. And what I really like when a name is approaching the 200-day moving average is for it to retake it, right? Because to me, and again, this is where you kind of have to have your own trading system. But for me, when a name gets above the 200-day moving average after being below for a while, it means something. It's significant, right? And it kind of, for me, defines whether something is in an uptrend or downtrend. So I get more conviction when a name gets above the 200-day moving average, right? And then, of course, now you have a little bit of a risk management system too. You could just say, hey, I'm going long versus the 200-day moving average, and it breaks back below, I'm out, right? And you're reducing your emotion, as much as possible, as we like to do in trading, to get emotion out of the equation. Workday's just not there yet, right? And even though they had a real strong earnings report, right, they're giving back some of that report. Now they could base here at 160, but again, at this point, I'm happy to wait for this thing to show some confirmation that it's recouping its recouping its uptrend. Because at the end of the day, like for some of these things, you may be thinking things more of the longs as investments, right? If you're thinking of an investment in this thing and you still want to have a stop price, then why not just wait till it gets above the 200-day moving average, right? If it gets above the 200-day moving average, then you could plan out your targets, maybe 198, maybe 228. But here you're just kind of grasping at straws. Right. And then, of course, and if it doesn't do that and it gets back above and it breaks back below, you get out and you wait and you be patient and maybe put your money in better places to work right now. All right. Just an example that I just wanted to illustrate, considering, how whippy this market is, and, how it changes very, very quickly. All right. So we talked about the VIX. We talked a little bit about the dollar. Again, not that big of a move in the dollar, up 0.25%. So not extreme. Bonds, I thought kind of acted, I think for one of the first times, I said this in the trading room earlier, but today it's starting to feel like, what's kind of creeping into the argument right now is recession and how big a recession is going to be. When you hear that type of talk, what usually does outperform are bonds as a flight to safety, right? We haven't seen that all year long, because the bonds have been doing more what the Fed has been kind of talking about, and so it's starting to feel like bonds are starting to act like recession. Like right now, it could be a bigger recession is kind of coming into the picture, right? We're certainly hearing a lot about layoffs, right? It seems like every day we're hearing a couple companies now, right? Also, there was a financial conference today too, where a bunch of the CEOs and different members from there that spoke at the Goldman conference were talking pretty bearish about the economy. So that I think, you could see bonds, particularly, like if that's the case, right, then this might be an interesting trade. Now, it has already moved significantly, and you've got the 200-day moving average over here, but I would basically watch this 128 level, I had up the 1 hour chart. We're also kind of coming into a couple of these virgin point of controls. So it might actually, one was taken out. Look at that, which I thought we were very close to it when I brought this up earlier. So you might see a little bit of backing and filling, but I would watch that relationship, right? We've talked before too about how you can purchase bonds through the Treasury Direct, right? So you could do that type of thing, right? The 2-year, which I think, it's better to just purchase the bonds, in my opinion. But I actually, in my IRA, I have some cash laying around, and I actually wanted to buy the 2-year today because the 2-year is yielding 4.3. We've got an inverted yield curve. So you could go to Treasury Direct and you could, it seems better to me to because you have the flexibility. Now you may want to lock in a rate longer, but for 2 years to get a bond for 4.3%, that's not too shabby. Okay. Locking your money up just for 2 years and you earn 4.3%. If you want to do it in an ETF, now an ETF is much different, right? But SHI looks kind of interesting. This is 1 to 3 year Treasury bonds, right? Again, deep downtrend. You only earn about 2%, I think, with the dividend here, but it's kind of carving out a bit of an inverted head and shoulders here. I would watch this 81.39. Okay. What else did I want to cover very briefly? I mentioned some names in the beginning of this video. I mentioned some names broke down. Yeah, I mean, so take a look, right? AEHR down 11.5% today, right? But not really breaking anything, right? The 20-day moving average, right? And really this the good portion of this momentum part of the trade, but let this thing kind of come in a little bit. It might set up and build, right? That's the one thing too, that if you're patient and you're not fully exposed, which I hope you're not, that you can come back to some of these names. They wash people out of them, right? And then they kind of set up again after a couple days. Usually, again, I don't have a crystal ball, but that's usually how it works. I like this IT today, right? Not much of a pullback, right? A lot of people don't talk about this one that much. It's not that crowded, right? But this thing is just kind of hanging out here at the top of value. I actually started a position in this one today. Another name that I'm watching too is MCD, McDonald's, right? Kind of more of almost a recessionary name. I watched to see if this thing can break 274. I like how this is starting to, the consolidation is getting tighter and tighter in McDonald's. So 274.23 is the bogey to the upside. All right. One other name too that I was looking at, which I got out of recently, but Booz Allen. Right, watch for this thing to break back above 1886. Also, it's consolidating quite nicely, acting very quiet. Right, so again, there's some opportunities if you go through more of those earnings names. Some of them, it's not a bad thing for some of them to kind of lose that really high momentum. Let them come in a little bit. All right, that's it for today's video. We'll have a lot more things, and again, give it a little bit. I'm using the same word over and over, but give it a little bit of patience here. If this can hold in here, you might get some nice looking setups with some of those stronger fundamental earnings names that we have a really nice in-depth list for. But again, patience is the key. How many times have I said that in this video? Have a great night, everybody. See you tomorrow.